Good day, traders. Chris Weston here, Head of Research at Pepperstone. Going to go through the charts, get you set up for the trading day, see how this all sort of unfolds. Let's start with the index markets, very much unchanged. You can see sentiment's okay. We've got the VIX down, well, 0.3 of a vol, 16.3%. Still like to see that kick up above 20% to get a bit of movement going across broad asset classes, but a little bit of sellers of VIX. Things have settled down quite nicely for the investment community, not so great for the trading community. But you can see here that we tried to make a new high on the S&P. We just sort of failed. There's a bit of a tail off towards the back end of the day. I've got the daily chart up, but you can see a pretty unconvincing trade, a bit of lifeless trade playing through. In terms of sectors, well, the discretionary sector was up 0.6. That was the best performer. Financials did okay, up 0.3%. A bit of a sell-off in the bond market, probably helping there. Energy up 0.3%. We'll have a look at the oil price in a minute. Down at the bottom of the chart, you've got materials and utilities taking out the points. They were at the bottom of the pack there, but not a great picture. In terms of the US 30, pretty much down 22 basis points. We've got the NASDAQ, well, pretty much unchanged. You can see there just a bit of a doji, a little bit of indecision to push that higher. But within the Nasdaq, one stock to really watch is Tesla. An absolute blockbuster session there for the Tesla bulls. We broke through these former highs, the 28th of May swing there, and we've seen a really strong range expansion playing through. So the stock up 5.3%. It feels like this could probably push into 680, maybe 700 in the short term. We'll see how the broader sort of semantics play through in the market, but this looks pretty strong, really strong momentum playing through in that. And if you look at the actual meme stocks, we look at AMC and GME as the poster child of the space, pretty much unchanged, which is unheard of in that space. In terms of crypto, a bit of volume playing through on the floors, but we've seen really good percentage moves. Link, Light, Dash, all those kind of names doing quite well. Ripple having a reasonable session there. In terms of Bitcoin, we're still holding the bear flag range low. You can see that fake out that we saw, really good buying playing through in the candle there as we traded through the previous lows, and we haven't had the sort of reversal that we'd hope, but can it build on that? Let's take this into the hourly chart to see how this looks, and I'll tell you what, how I'd be trading this right now. Well, we can see supply coming into 34,420-ish, kind of that region. This needs to break. If this can sort of break and push higher above those levels, then I think we get into 36, maybe 37,000. I think that's really where we need to go, but obviously if we sort of roll over in the session ahead, we could see another situation where this bull flag gets tested. Will we close and firmly close below this level is obviously what we want to see, but it's hard to get really excited about this. I want to see a bit more buying coming through and buy momentum before I get excited about Bitcoin in the short term, and that seems to be the sort of level where we're seeing supply coming through. In terms of FX markets, well, we flipped over to the new session, but what we actually saw was the Aussie yen being one of the better performers there. Let's take this back to the daily for just oversight in that, and you can see that we've sort of traded back below this range low. It's pretty unconvincing at this stage, but can we hold this level? Can we build on that? There's a lot of talk on the floors around CBA's call yesterday, and you're always going to get it when one of the big four banks talk about interest rate hikes. But the first of the big banks to come out with a big call that we're going to see the RBA raising rates late next year, so something to do focus on. But we've seen a move back here. Can we now build back above here? We've got price just sort of holding this 5-day exponential moving average. It's defining the move. It feels like this may want to push back into 84.50, back into the middle end of this range that we've been seeing. So one to watch. Is unconvincing, but if this starts to kick up, I'd probably be going along with that. The yen crosses have generally been been bought. The yen's been underperformer on the day. Have a look at the Aussie dollar, because we've back testing this retest of the breakout lows. We're back above the 200-day moving average. Again, like the Aussie yen, you can see a situation where price looks to be building. A lot of that down to what we're seeing in industrial metals, which we'll cover in a second. But the Aussie's looking okay. If we have a look at dollar yen, this has been a really good one traded from clients overnight. So you can see that we've had a strong breakout of the prior highs here. That's really good to see for the bulls. But we're sort of just finding a few sellers. It's a little bit unconvincing into the 31st of March high. Can we build on this? Now, I will say that if you have a look overnight, not a huge amount of data to drive. The market PMI numbers didn't really do too much. We saw a little bit of selling in the yield in the bond markets, yields pushing a little bit higher. Market PMI 62.6 on the manufacturing numbers. That was a good number. Oh, it's a brilliant number. It was new all-time highs. Input costs going up on that diffusion index, 83.8 for 13-month there. We've seen consecutive moves up. On the service side, 64.8. That was a little bit weak on the market PMI services. but it was still good expansion from the previous month. Next week, though, put the dollar on your radar. We've always got the dollar on the radar, but next week we do have the ISM manufacturing and we get the payrolls number. That's going to be a big one there. So certainly we're looking for at least 600,000 odd jobs to come through. Let's have a look at cable because we've got the Bank of England coming through at 9 p.m. tonight. Great setup here. We've just traded into 140, which you can see is sort of this horizontal resistance level. We traded through into there last night, rejected that level. We need to see another retest. Can it break and close through there? If we do, then obviously we're looking for sort of 141 on that momentum move there. But it's sort of trickling higher. We just found a few sellers into the obvious resistance level. So one to watch. Can we lean against that? Can we push above that? One to see there. But we're just making a series of sort of higher lows. And the Bank of England is expected to be a volatility event. I don't think if you look at implied vol overnight, it's not really that high at this stage. It could build, but certainly people aren't expecting fireworks from that meeting. Let's have a look at the commodity space. Oil prices straight away because we saw the energy sector doing quite well, but a bit of a reversal off this 74.20-ish level. Not quite convincing, but we're still holding this 5-day exponential moving average. A bit of indecision in the previous session. We tried to sort of break there. So it could be sort of forming a bit of a short-term top in the crude market. It doesn't feel like it's going to collapse anytime soon, but we might be seeing a bit of congestion, a bit of sideways chop in the short term. Gold prices always see a lot of flow in gold, but we traded up into 17.95. Traders faded that into the 5-day exponential, so we're still holding that. We're consolidating in this tight range now. So can we break through the previous lows? That's what we're going to be watching for. Can we trade through the 17.73, kick on to this previous low, which if we take it out in the daily, we can see just how significant this support level has been around sort of 17.64 kind of region. So if we break through those lows, we go back to test that, it will be significant, especially next week with the payrolls number coming through. If that's going to be hot, yields could rise, real yields could rise, and that could weigh on the gold price. It could give a lift to the dollar in that situation. So some really good setups. Let's have a look at copper because copper's been the industrial metal, obviously putting a bit of pressure into the Aussie dollar price there. But we've come into the 24th of February highs. We've just, as you see there, we can just see that we've seen sellers coming to the exact point there. Got a 50% retracement of this move, playing for a little bit higher there, and that needs to go. But if we can close above, 4.32 a pound, then we can probably push a little bit higher in the short term. But that said, if we do take the time frame in, if we see prices selling off into that, could be quite significant as well. Probably coincide with what we're seeing in the dollar. So all in all, sentiment's been okay. A slight drop in volatility. The dollar's up 0.1%. We've seen the Aussie working quite well. Industrial metals working quite well. Gold's on the radar. And some setups really to watch as we go into the trading session ahead. So good luck trading.